Hello, everyone. My name is Brittany Button, and I'm a long-term care insurance specialist at Art Jetter and Company. Thank you for joining us on this highly anticipated presentation regarding my immediate care plan. Now we're joined by the Vidal Marketing and Federal Life team, and as you know, today we're going to take an in-depth look at the My Immediate Care Plan and how it can be a solution for those already receiving extended care services or those that are going to be needing care in the near future. Now, before I turn the presentation over, I just want to mention that if you have any questions throughout the presentation, go ahead, type those into either the question or chat box. Those questions will be answered throughout and towards the end of the presentation. Also, you may have noticed we do have a few handouts available for you to download, so make sure to take just a few moments to go ahead and save those. So without further delay, let's get started.
Okay, well, if you want, I will. My name is Neil Reardon. I'm with Federal Life Insurance Company. I'll just give you a brief overview of Federal Life and then turn it over to Lee and Damien, the experts at this program. I am the field vice president at Federal Life. I've been with the company for quite a number of years. I won't mention, but traditionally, Federal Life has been around since 1899. We've been around for quite some time. We have done traditional life and annuity products over the years. And roughly about 5 years ago, we demutualized. We basically did a one-time stock offering, and we raised capital for some additional projects. And we basically changed gears in just about everything we're doing now. And Bain Capital is actually the partners that are supporting the company, and we are now looking to do different things. We're offering things like Medicare supplement, we're offering some A&H products, but we really want to build our annuity business. And through that relationship with Bain Capital, we met the Vidal Marketing Group, Lee and Damien. We've been working with them for a couple of years now to promote the immediate care plan. And personally, I think it's a wonderful product. It certainly fits a need, and we are doing quite well. We're building momentum with that product. So just a little background on the company. I'm going to turn it over to Damien and Lee, let them present the program. But I did want to let you know that that Federal Life, a long-standing company, and if anyone on the call today wants to reach out to me directly, if you need help or have questions about Federal Life, that'd be great. If you decide to contract with Federal Life for this program, along with your executed contracts, you will receive marketing materials. We have some really nice sample brochures and packets of things that you might be able to use with that. So again, just a brief outline, and I wanted to turn it over to Vidal Marketing.
Hey Neil, thanks for that. And thank you, Brittany, for the introduction. My name is Damien Conway, and I'm joined by my colleague Lee Maynard. So today what we're going to do is we're going to spend probably the next 40 minutes giving you a bit of background to the My Immediate Care Plan. We're going to start with a little bit of history and a bit of context, which I think will hopefully firstly, we'll give you some context in terms of why you're listening to two fellas from across the pond, and that will give you an idea of just why this product is so important. So we're going to talk about a little bit of context. We're going to talk briefly about the product. The product's an incredibly simple product, very much an insurance product, but we'll run through just the details of the product. Lee's going to talk about a case study, which will give you an idea of just what we can do in terms of the benefits that we can bring with the underwriting that we do on this product. That will also give you an idea of just what the right type of client looks like. So we'll talk about that through a case study, and then we will jump to just what the next steps are. So yeah, let's start with a little bit of history. So Lee and I are obviously based in the UK, but going back 7 years ago, we brought this product through the company that we were working for, which was a small UK carrier. We brought this product to the US in 2016. We marketed it, some of you might remember this, we marketed it as the immediate needs annuity through Genworth out of Richmond in Virginia. So we passed most of the marketing and distribution across to them. You guys will know what happened to Genworth. Genworth decided to pull out of long-term care new business, and that had a material impact on what we were doing. So rather than opt for the easy life, which was for Lee and I to go back and start working in the UK, we decided that we wanted to, in fact, we needed to bring this product back to the US. In the 3 years that we spent marketing this and helping the guys at Genworth with this, we spent lots of time in care communities, lots of time talking to clients, and lots of time talking to agents and advisors. And singularly, we found out that there absolutely was a need for this product. So we decided that we would bring this back. So we found the guys at Federal probably 2.5 years ago. We were very particular about the type of company that we wanted to market this for. So we were very, in fact, delighted that we managed to get a hold of Federal and started working with them. We introduced them to our reinsurer, who are Hanover Re, based out of Hanover in Germany. And that's a critical thing that Lee will talk a little bit more about as we go forward. The expertise to be able to write this product doesn't currently exist in the US. The intellectual property is European, and that's why we brought the market leaders, Hanover Re, into this whole situation. So we started working with them 2.5 years ago. We brought this product to market about a year ago, and we're gradually rolling it out. We're not taking it mass market. We absolutely want to make sure that the quality of advisor and agent that's taking this out, talking to clients, is something that we're very keen that we maintain, and that we control the quality of people that do that. That is purely so that we can make sure that the client who buys this product knows exactly what they're getting. So yeah, that's why you're talking to a couple of us. This product is very similar to a product that's offered in the United Kingdom, and it's the only way that you can use an insurance product to pay for care in the United Kingdom. And Lee's just going to give you a little bit more context about how that works in the UK, just to give you an idea of why we think this works perfectly well in the US. Lee, do you want to carry on?
Yeah, of course. Thanks, Damien. So just to give you, again, just a bit more sort of meat on the bone, if you like, the product that we're talking about has been around for best part of 23, coming into 24 years next year in the United Kingdom. We tried and failed with the pre-need market, so long-term care insurance. It lasted, I think, about 18 months, and not a lot of policies were sold. So this particular product is the only way that you can use to pay for care in the UK. It started because our dearly beloved UK government figured out that they were spending quite a lot of money on social care, and that figure was increasing. So they went to the financial services market and to a number of insurers and said, look, you're the experts. Can you figure out what's going on? Why are we spending more on social care from the government than we should be? So to cut a long story short, it was found that around about 25 to 30% of those people that went into care ran out of money. And very simply, it wasn't just a question of they didn't have enough money. It was a question that they really weren't being offered anything that helped them hedge the money that they did have to try and last longer than it possibly could do. And effectively, you know, when you look at the situation in the UK and the US, I'll tell you what tends to happen. That if you think about the journey somebody goes on all the way throughout their life, so you spend most of your life in the accumulation stage of building up assets, building up property, thinking about retirement, coming to retirement, using some of those assets to pay for your retirement, thinking about a legacy, and then, you know, for a lot of people, the long-term care, I guess, crisis hits at some point. That may be through slow cognitive impairment, through people that have dementia, Parkinson's, Alzheimer's, people that become frail. But at some point, throughout the course of that in their later life, it's obviously determined that they need to think about paying for care. And what we tend to see at that point is that there is no real information, holistic information, that helps those individuals understand what all their choices are for paying for care. The vast majority of people that go into a care situation will have some form of income. They will have obviously care expenses, and then the gap between the two is paid from assets that they've spent all of their lives accumulating. Now, the cost of care, as we know, is going up. It's rising anywhere between 5 and 12% every year. An average cost of care that we're seeing, probably for an assisted living care community, anywhere between $70,000 to $120,000 a year. Now, that can quickly have a real negative impact on the assets that people have. And what this particular product does is that it uses underwriting based on people that are in that later life space, that are receiving care, that have comorbidities, that have some form of dementia, and it takes that underwriting capability to effectively give a rate that you would not get anywhere else in any product. And what this does, it does one of two things. It creates a stop loss. So it means that once you have one of these products in place to cover that shortfall, then that will continue as long as the individual is alive. And then secondly, it provides absolute peace of mind. Thanks, Damien.
Thanks, Lee. Do you want to just move on to the next slide, and we'll talk a little, if you can you make that a little bit bigger? We'll just talk a little bit about the product. So what this product does is it provides a guaranteed income for life. It provides guaranteed income for life for people who are currently in care presently. Yeah, currently in care, sorry. So let's just, the product is incredibly simple. It's built on a SPIA chassis. So I'm going to run through this pretty quickly. But while I'm running through it, can you please bear in mind that this product is absolutely an insurance product. It's a way of transferring risk from the family of somebody who's in care to an insurance company, and that risk is running out of money. So properly a transfer of risk, an insurance product. What we can do is we make a known amount of money last an unknown amount of time, and that's why it works fantastically well for people who are currently in care. So as I said, the product is a SPIA. Our minimum age is 70, maximum age is 95. Minimum premium is $50,000, and for additional contracts, it's $25,000. When we run through the case study, you'll see why the $25,000 works particularly well. So minimum premium is $50,000 generally, up to a maximum of $1 million without Home Office approval. But we're pretty sure that if we have the right type of case, that should not be an issue. So what the product does is it provides guaranteed income for life for a single premium. Yeah. In terms of death benefit, we have an early death benefit, which is included in the cost of the plan. So if the death occurs in month 1, we return 100% of the premium minus any income benefit that's been paid. Months 2 to 3, 50% return of premium minus any income payments paid. Months 4 to 6, that reduces to 25% of the premium minus any income payments, and thereafter there is no early death benefit. So from month 7 onwards, 0. Yeah. Now, however, if you want to protect that income payment, then there is the facility to add period certain, and we offer that from 1 year to 5 year in 1 year intervals. So 1, 2, 3, 4, and 5 is available. The other thing to talk about, I guess, is cost of living adjustment, because as we know, if you guys have had experience of dealing with people in care, and as Lee alluded to before, there's no more certain thing that the cost of care is going to go up on an annual basis. So we offer cost of living adjustment from 1% up to 8%, and that will help when you're talking to your clients and when you're working with your clients, then that will help that the income payments match that cost of care increase. Just if we're thinking about this product, we do have one knockout question, and that knockout question works in reverse, if you like, for the type of people that this product will work for. If you can answer the following question yes for your client, then the likelihood is this product may work and we may be able to return a beneficial premium, a beneficial income rate for them. And that question is your client currently receiving formal paid for care? If you can answer yes to that, then the chances are this product might work and then it might be able to return increased income payments. Lee, have I missed anything? As I read the other bit?
I mean, that's apologies if some of you out there are experiencing slight problems with the accent. If anybody doesn't understand what our beloved Scottish friend is saying, then just put something in the chat, and I'm more than happy to do a little bit of translation for those of you that can probably understand me or not, as the case may be. But no, that's I think that's covered everything on there, Damien. Thank you.
Thanks, Lee. Normally I say if you can't understand me, you're just not trying hard enough. So yeah, if we can move on to the next slide, Lee, that would be great. Thank you. Just briefly, we're talking about where this product works. So we believe, in fact, we know that there's probably about 1 million new people coming into care every year. And where this product works is probably for about 35% of those people. So that's people who have insufficient income to pay for their long-term care needs, but have assets to fund that income shortfall. Now, Lee will talk about the income shortfall when we go into talk about when we look at the case study. What we've also said here is for people who have no long-term care insurance in place, that's probably not exactly correct, because there's a lot of people who have set up long-term care, probably set it up 20, 30 years ago, and when it was set up, nobody could have foreseen how the cost of care would have increased. So potentially this product can also be used to top up existing long-term care insurance. We believe the potential of this market is massive. Conservative estimates put it at 30 billion plus. So yeah, that's a little bit about the target market. We've talked a little bit about the product. I'm going to hand back to Lee now. As I said, the product is quite a simple product, but what we're going to talk about now is the unique selling point of this contract. The bit that makes it different, the bit that actually adds the proper value for this, and that's the underwriting. We're going to do that through looking at a case study. Lee.
Damien, thank you. Okay, so case study. This is actually now a client of Federal Life as a result of the immediate care plan. This is pretty much an average type of client that we tend to see. I'm going to run through. There's going to be a few things that I will pick out as we go through. So I'd like to meet Joseph, or Joe. He's an 85-year-old gentleman. He's been a widower for 2 years. Joe moved from home into a memory care assisted living community just over a year ago, and he had a diagnosis of dementia 2 years ago. The exact type is still to be determined, and for those of you that actively work in this market, you'll find that some will have diagnosis, a lot won't, because you also get a lot of mixed dementias where it's very difficult to actually diagnose the exact type of dementia that an individual will have. Joseph has had multiple falls previously in TIAs, and he's currently failing 6 out of 8 activities of daily living. For some of you will be going, whoa, okay, so, I only know 6 ADLs. We have 2 additional ADLs, and that's not to try and catch people out to see if people are failing more or not. The reason we have 8 ADLs is because we want to capture as much information on the underwriting to be able to provide the best possible rate that we can for clients out there. So there's a very good reason that I've highlighted that particular paragraph in bold. That is the bit that we look at for the underwriting. The underwriting that is done by our friends at Hanover, I can't really tell you enough how important that is, how much intellectual property that they have received over the last 23 years in doing this. There is nothing like it anywhere else in the world other than our friends at Hanover having this kind of intellectual property into the later life market. That's where they've specifically looked at for the My Immediate Care plan. So the annual cost of the community that Joe is in is $114,000. Now, we know he's got income from his Social Security and a pension of $37,200. Now, that leaves what we call the care gap or shortfall of $76,800. That's a really, really important number because it's the shortfall or the care gap that we look to solve for. Okay, so when we look at this, we don't, if you look down at the next part of that particular paragraph, Joseph, we know, has got around about $500,000 in assets. He's got that from the sale of his property and some other small investments that he had. Now, what we don't do is we don't look at Joseph and go, right, okay, let's have a look and see what $500,000 is going to get for us. That's not what this is about. What this is about is providing peace of mind for those individuals that want to cover that shortfall, because any of you that are sitting there with pen and paper or a calculator or whatever it is, you're looking at the $76,800 thinking, well, Joe's got $500,000. He's going to be okay. That's going to last 7 years. What happens after 7 years? But more importantly, that particular shortfall doesn't take into account any increases in the cost of care. Now, we know as sure as eggs is eggs, as they say over here, that care communities and home health care companies will increase their prices every single year. Now, we are seeing, particularly since COVID, prices increasing anywhere between 5 and upwards of 12% per annum. Now, that has to be planned for. That's not just going to go away. So the way that this was looked at, the attorney, the power of attorney in this case is Joe's daughter. It's his only daughter. She's the only power of attorney for both healthcare and for financial. And she was really nervous that when you look at the cost of care increasing every year, that $500,000 is going to start decreasing pretty quickly. It's not going to be 7 years. It's probably going to be nearer 5, 5.5, 5 3/4 years by the time you incorporate those increases. Now, the other bit to note is that Joe's daughter was also concerned that, look, if something further happens to her dad where he needs even more care within the community, then there's going to be a cost to that. Now, that may mean almost 24/7 care in the community, not knowing what type of dementia that Joe has got. So if that does happen, generally the cost of that increase is anywhere between $20,000 to $40,000 a year, and that has to be met. So if that does happen, she wants to ensure that there is still enough money for that to happen. Now, the third part of this puzzle is that the memory care unit or assisted living community that Joe's in does not accept Medicaid. Joe's daughter is adamant that she does not want her father going on to Medicaid. She doesn't want her father having the quality and standard of living that he's got currently to go to probably what will be a room that is shared with somebody else in a segregated part of the community, because they won't tend to integrate Medicaid patients in with full funding patients as well. And she didn't want that to happen to her father. So long story short, Joe's daughter met with a care funding specialist up in Chicago, and they sat down and they went through the numbers, and it was decided to get a My Immediate Care plan fully underwritten quotation, and we'll talk more about how that quote process goes. So when the numbers came back, we were looking to cover this shortfall of $76,800. That's the gap. That's the bit that's really giving a lot of nervousness to Joe's daughter about how do we continue to pay for that. Now, when we do the quote and we get the quote back, we will always go onto Canex, onto Blueprint to get the best possible SPEAR rate out there on the market, so that we have something to guide against. So if you don't have any other SPEAR rates out there, you've got nothing to compare how good or how bad the My Immediate Care Plan rate is. So to cover that 76,800 on the standard SPEAR market, the best SPEAR rate for the day came back at $482,915. We returned a quote rate of 231,540. So that's some 52% better than the SPEAR rate. Now, what was important about this was that for Joe's daughter, it meant that for $231,500, the $76,800 would be there. It would be done for life, for as long as her dad lived. But as importantly, it meant that there was over $250,000 there, that if anything happened in the future, she still had the money to be able to pay for it. Now, Damien mentioned when we looked at the product details about the additional, about putting in an additional premium or additional policy. So what would happen is that if if Joe did need further care, and let's say, for example, it was going to cost an additional $30,000 a year, then what we would do at that time is repeat the quote process to see what figure would be required to cover that $30,000 a year. And now, if you think about the fact that if that's in 2 or 3 years' time, Joe is going to be older and he's probably going to be a fair bit sicker, that means that the rate that we'll return on that one will be even better than the rate that we return now. Now, you'll see that there's a second section at the of numbers on the right-hand side at the bottom there. When we do a quote, and we'll have a look at a quote very shortly, we return 54 different options. As Damien mentioned, we can go from 0 to 8% cost of living adjustment, as well as going up to 5% period certain. Now, we show on a graph all of those different quote figures. Now, when the quote came through, the care funding specialist up in Chicago sat down with Joe's daughter, and they were talking what was important to her, what was the real thing that she wanted to include if she could. What she was concerned about was the cost of living adjustment. She was concerned that the care fees were going to increase and that she wasn't going to be able to afford those and have to worry about paying those increases every single year. So when she had spoken to the exec director, the exec director really couldn't give an exact figure of every year of what that would go up by, but basically saying that over the last few years, it was anywhere between 5 and 11% on the increases. So they looked at the 5% cost of living adjustment. Now, for the additional 5% COLA, the immediate care plan rate went up from $231,540 to $251,599. So around about an additional $20,000 on the premium that we would take. Again, we did the best SPEAR rate to compare that 5% COLA, and the best SPEAR rate that came through was $664,364. So a 62% differential. Now, this was even better for Joseph's daughter because at the end of the day, it meant that the $76,800 was now covered for as long as her father lived. It would increase by 5% every single year, and there was still enough in the remainder of savings to be able to, if anything happened to Joe in the future, that they would have the money to cover it. And if it didn't, that meant that there would be a legacy for Joe's daughter as well as the grandkids. And that was really, really important. When you look at that cost of living adjustment, she had gone back to the exec director and had a conversation with the care community to say, look, if I put in place a plan that is going to be guaranteed to pay dad's care fees for as long as he is here, but we increase it by 5% every single year, guaranteed, would you be okay with that? And of course, the executive director said, yes, they'd be more than happy to do that. And that's effectively where we got to with this. And as a result of that, and I will go on to now the next slide, which will show the quote that we do, it meant that Joe's daughter decided to go with the 5% COLA rate of $251,599. Now, as you'll see on here, we give all of the variables right the way from 0% COLA life only up to 5 years certain, right the way down to 8% COLA. And it's really important to have a conversation with the power of attorney, whoever it is that's dealing with the individual that is receiving care, about what is best to go in there. Now, for those of you, again, that have worked out the math on this, at 76,800 divided by the 231, we're figuring out that it's probably around about a 3-year life expectancy that has come back on this quote for Joe. So the care fee specialist did have a conversation with Joe's daughter about putting life with 3-year certain in there, and that figure is the top figure there of 314 and a bit thousand. You could have put in there with the 5% COLA as well, and you're looking at 340,000. Now that's still affordable to Joe's daughter, because there was just over $500,000 there. But with the daughter, she was not concerned about the 3-year certain. What she was doing this for was absolute peace of mind, knowing that she did not have to sit and write a check out month in, month out to the care community, not knowing what was going to happen every January in terms of increases and how long dad was going to be living for in that community. The vast majority of people that come into these circumstances, when they look at what that shortfall is, they basically sit and hope to God that mum or dad dies before the money runs out, because they really don't know what they're going to do at that point. And that's where we come up when we have the conversation. And these are the things that that we will talk to you on any training that that you want to do through Brittany and her team. Damien, have I missed anything at all?
No, I don't think so. I think you've pretty much covered that. Brittany, I don't know, are you monitoring questions? I'm not sure if we've had any, but if you have, this would be a good point if there are any questions there that people want to ask before we move on to a little bit of the process piece.
So no questions yet, but I am monitoring. So for the folks on the call, if you do think of any questions, again, feel free to type those into the chat and or question box. I am taking a look at those, but you've got everybody pretty engaged, so we'll continue on.
I guess
we love get some questions. We love the questions.
Absolutely. I guess they're probably just trying to work out what I'm actually saying. So yeah, that's cool. Lee, no, that makes perfect sense. As we haven't got any questions on the case study, should we just pop on to the next part, which is just a little bit about process? I'm going to leave that for people. We'll talk about process. So the important thing with this plan is you need to think of this as an insurance product, as we said right at the start. Yeah. So to get to the point where we actually get your client priced and come back to you with a guaranteed quote, we do things pretty differently from normal spares. The whole process is different, because what we do is we ask you to take an application form right at the start of the process. Yeah, that application form gives us the authority to collect the medical evidence, and with the medical evidence, we underwrite and come back to you with a guaranteed quote. We don't do estimates. It just doesn't work. Any estimate that we would have been able to give would have been inaccurate. We found that out the last time we did this with our friends at Genworth. It just didn't make any sense. So what you need to do is to be able to take a guaranteed quotation, to take an application form at the start of the process. That allows us to collect the medical evidence and therefore come back with a guaranteed price for your client. The kind of things that we look for in that process, we need information on three subjects: the client's health, the client's wealth, and the legal circumstances. So let's pick up the health piece is pretty simple and straightforward. You have to complete an application form that stretches to about 6 pages. And in that, we ask information about the client's health. That allows us to be able to start that underwriting process. It also gives us the authority to collect the medical evidence, and I'll talk about that in a second. Wealth, you need to complete the suitability form at the outset as well. That stretches to about 4 pages. And what we want to ensure there is that the client's got sufficient funds to be able to purchase this plan, but also has sufficient funds in case care circumstances change. We don't want to be in a situation where we're taking the client's last dollar. But if we follow the way that Lee said this, where we're actually solving for that care gap, then we do that in the most efficient manner possible. Yeah. The last part is legal. Potentially, we can take cases where clients are cognitively impaired. So if that is the circumstances, what we want to ensure is that we're dealing with the people who have the legal authority to transact this business. So if the client is cognitively impaired, we insist on there being a financial power of attorney in place. And at that application stage, we need to see those power of attorney documents just to ensure that that's the case. So once we have that information, that allows us to underwrite. And you'll be delighted to know that the underwriting we do is totally non-invasive for the annuitant. We don't even have to talk to the annuitant again, really. What we do is we request an attendant physician statement, and we set up a telephone interview with the client's caregiver. Now, if the client or the annuitant is in residential care, that will be probably the nurse or the carer that deals with the annuitant on a daily basis, or in some circumstances, the executive director who's responsible for the clinical side of the business. That stretches to 30 minutes. And with that information, the telephone interview, and with the APS, we will be able to return a guaranteed quotation for your client. If the telephone interview is conducted by a health professional, we probably won't even wait for the APS to come in. So realistically, from receipt of application form to getting you a guaranteed quote, we're delivering that presently in 5 to 10 working days. In terms of funding this, we can accept qualified and non-qualified money. So we can also do 1035 exchanges. And obviously for qualified, we can do qualified rollovers if that works. What else have I missed, Lee? What else have I missed?
I just think, you know, the difference with this is knowing your client, understanding your client, and having that journey through the client. This is it's a different market. And you know, I'll be brutally honest about this. You're dealing with people that are going through a care crisis. You will be seen as a, you know, if you help these people, you'll be seen as a real right-hand person. Now, think about, you know, if we slightly come off this particular product, but think about the market that we're entering into. You're dealing in a market, and for those of you that have potentially got books of business or client banks or people that you do market out to, I'll give you for free a question that you can ask, which will open up all sorts of areas for you. And the question to ask all of your clients or anybody in your book of business is, are you currently acting as a power of attorney for anybody receiving care? Because if you are, they're probably, and these are your clients, I will guarantee they're probably going through their own care crisis themselves. You need to be the right type of individuals dealing with this. It's, you know, it has to be an empathetic approach. And when you're dealing with families, as we all know, you know, we have a saying, or I've certainly had a saying, and I've been in this particular part of the market a long time, where people say that blood is thicker than water. Maybe, but I can assure you that money becomes thicker than blood when it comes to a lot of these cases. And it needs a good rock solid hand to be able to help these people and guide them through the care crisis that they're currently going through. So, you know, we ask these questions on the application, as Damien was saying, the health, the wealth, and the legal. Once you get to understand all of those questions, that effectively becomes your fact find. That becomes your discovery process when you're talking to these individuals about how you can help them. Now, do not just focus on the My Immediate Care plan. And this is a crucial bit. If those of you are looking to increase your intergenerational part of your business, this is a phenomenal way of doing that, because ultimately you will, you know, if you've got clients out there, you will know those clients, but what you won't know, what are their parents doing? A question that you probably ask at some point of any clients that you have is, you know, are you expecting to get an inheritance at any point in the future? And most people go, yeah, of course we are. You know, I've got mum or dad, and you know, when they pass, we'll probably get the property, or we'll get some land, or we'll get some, you know, some money from a trust, or whatever it is, you know, which is fantastic. But what you then don't ask is, okay, so what would happen if mum or dad had to go in and receive paid for care? What would happen to that inheritance at that point? Is that, you know, how are you looking at that? And the answer is they probably don't know. But if they have a conversation with somebody that does know, i.e. somebody that's there to help them through that process, there's all sorts of other areas that you can get involved in. And what we tend to see is, for those families that have parents going through this process that are concerned that their parents or their mother or their father will run out of money at some point, I tell you what, those individuals that are acting as the powers of attorney are thinking about their own long-term care insurance policy. If they haven't got one, they'll certainly be thinking about it, because they don't want to be going through this whole process themselves, or their kid, you know, their kids to be able to do it. So just by talking about this area of later life, it opens up an awful lot of opportunities for you in more than just one area than the My Immediate Care Plan. What this does is this now gives you something to be able to have a conversation to those people that go, you know, can I pick your brains on something? I've got my mum or my dad, they're looking to go into care. Is there any way that we can do any kind of long-term care insurance for them? Well, of course, the answer is no, because, you know, at this point, they will have some form of comorbidity. They may well have some form of cognitive impairment. Therefore, they're not going to be anywhere near eligible for anything that you've probably got to be able to talk to them about. But now you have. And just by having this conversation, it opens up the fact that you can tick the box with peace of mind, that if there is sufficient funds there to cover that shortfall, then ultimately these people will be able to stay having and receiving the care that they rightly deserve, and not being able to run out of money. It also creates a phenomenal stop loss. We have come across so many cases where people have gone through $1 million of funds to pay for care. And you know, the good news is they were probably left with $100,000 or $200,000 at the end of it. Isn't that fantastic? The care's only cost them $1 million. No, it's not, because now you can have a conversation with those people about using some of those funds as a stop loss, and then whatever is left, that can then be invested rightly on behalf of the beneficiaries. So it opens up a really good dialogue about protecting people's money. Is that fair, Damien?
I think that's perfect. I think the other thing I'd like to add just at this stage is, please remember, this product is unique. There is nothing like this presently in the United States. So with this opportunity through Jetta, you know, as I said right at the start, we are not mass marketing this product. We have, and partly because we're working with Jetta, because we've known them since we did this the last time round at Jetta with Genworth. So that's partly the reason. We are very selective about why we're doing this. So please be aware this is absolutely unique and not available everywhere else. Brittany, I think it's probably, we're probably getting to, I think we said we would talk for about 40 minutes. I think we've run over a little bit, but we're probably about there in terms of what we wanted to cover today. Can I just talk a little bit about next steps, or is that something that you want to talk about, Brittany?
No, go ahead. Feel free. We've still got people engaged. A few questions have come in, but I think we'll be able to tackle those once you've wrapped up. So let's continue on.
Perfect. So the next step for us really is, if this is something that you are interested in, please speak to Brittany. We will work with you hands-on with, you know, on particular cases, and with some extra training in terms of the right way to talk to potential clients, where to find those clients. So if this is something that you're interested in, please reach out to Brittany, and she will put you back in touch with us, and we will set up some more meetings, another meeting to talk about this. In terms of contracting, what we're going to do is, if you have clients that you think this might work for, again, reach out to Brittany. She will put you in contact with us. What we're going to do in terms of contracting is get you contract if you have a client. So we'll do it just in time. Neil can sort all of that stuff out for you. I can see Neil at the moment. So yeah, that's how we're going to cope with this moving forward. Lee, is there anything else we need to say in terms of what we're going to do in terms of the next stages?
No, I think just remember we will help you. Every case is unique. Every case is different. This is why, you know, way back at Damien said that we don't do estimates. We don't do, oh, can I just have a ballpark? Yeah, I can give you a ballpark. It's the cost of care. That's the ballpark. In Joe's case, you know, it's that cost of that shortfall. How long is Joe going to live for? I don't know. It might be 4 years. It might be 2 years. It might be 10 years. So, you know, there's your ballpark. 5 years at 76,800, increase that by 11%. That's why we don't do these. The underwriting is absolutely unique. We look at an awful lot of touch points when we go through the underwriting process. So, you know, when you're having the conversation with the clients, it's so important to have the right figures there for those individuals at that point. So we will help you. We will coach you. We've spent a lot of time with Brittany and her team going through this process. They understand it very well. You know, but we are here to be able to walk you through any of the cases, how to build your business with care communities, whether it's through your own book of business. We've got plenty of experience in that, so we're more than happy to help you.
Perfect, thank you, Lee. Brittany, I'll hand it over to you. Sorry, Lee.
I was just going to jump in real quickly and just let everyone know. So it's been about, I think about 2 years that I've worked with Damien and Lee. I want to tell you, they're very passionate about this program. They're very passionate about what they do with this. And I highly recommend it. I know they enjoy it, that anyone interested, reach out directly to them, not only about the product, but about individual cases, but equally important about approaching a care community, you know, developing relationships, how to get in, what do I do, how do I knock on a door, that kind of thing. They've been doing this for quite some time, and you know, I've had the pleasure of working with them in person as well. I do understand Damien's accent finally. That's worked out really well. But honestly, they really are great to work with. This is such a unique product. Federal Life is the only carrier out there that is doing this, and it just fits, you know, the care community to help support families to pay for this. We all know how much care costs, so it really is a wonderful program. But I highly recommend, again, reaching out to, you know, once Brittany and her team get you set up, to reach out to the guys and myself as well if you need help. And I did want to mention, so this is just about Federal Life real quickly. So we have been kind of operating in an arena where an AM Best rating was not necessarily important to us. We feel it's extremely important now, and we're excited to know that AM Best released a preliminary credit assessment for Federal Life of A-. We found out about that yesterday, and the next step would be to go ahead and get that AM Best rating of A-, and that'll happen very shortly. So it's good news for us. Again, it wasn't that important for us, so we just didn't subscribe to AM Best, but now we do feel it's important. I think it's important for everyone here to know that the financial side of the company is here to support everyone. So just wanted to let you know that, and thank you, Brittany, for setting up today's call as well.
Of course, and that's very exciting news. I'm happy to hear about the AM Best rating.
Yep, yeah, it's good news. Woo!
Yeah, there's a press release out, and the full rating will come out at some point, and we'll, you know, send out another press release as well. So
perfect. All right. Oh yeah, go ahead.
So I was just going to say that's all we wanted to talk about now. So if you have any questions, we're quite happy to see if we can answer those now.
Yes, so we did have some questions come in, a few I can tackle, a few I'll hand off to y'all. But I do want to say our team at Art Jetter & Company is very excited to be working again with Lee and Damien and their team. You know, we did work with them on the Genworth side, and they're hands-on. They want this to be a successful opportunity for the folks you're working for, and are here to be a resource for you. So, you know, there's some carriers we don't see that type and level of support, so we're very excited to have this relationship back again. First question that came up was about state approval. So as of right now, the immediate care plan annuity is available in all states except California, Massachusetts, Montana, New Hampshire, New York, North Dakota, and Vermont. If you need me to send that listing out, I'm more than happy to do so after the call today. So question that came up, and I'll punt this one off to you guys. In Joseph's case study, did he have a period certain? Also, do you get any reluctance from the power of attorney to provide their proof as a condition of a quote?
Shall I pick up the power of attorney piece first of all? No, absolutely not. If we're, we haven't come across that, and I think in the 7 or 8 years that we've done this in the US. So if there is a power of attorney in place, they tend to be pretty okay about letting us see a copy of that power of attorney document. They're used to doing that for all financial transactions, and if they've got a healthcare power of attorney in place as well, then that's pretty standard. They will be asked that, but to provide that when they're dealing with their loved one's healthcare as well. So no, pretty much not. In terms of the period certain was an option, but Joseph's daughter was less interested in that period certain. So to give you a bit of context, in the UK, very, very few people take any protection on this this plan. So most people do the life only equivalent. What we are finding in the US, and this makes sense, that more and more people are interested in looking at that protection. But just so that you understand that the protection piece, if you think about what we're actually doing when we are putting in place a period certain, that's a protection. So that's like life cover, if you like. And the people that we're dealing with are old and are generally in poor health. And if you're thinking about how much it would cost to insure somebody that was old and in poor health, that will give you an idea of how much of an increase potentially that can put onto the premium if you choose that. But what we're finding presently is that does work. People are interested in protecting that income payment. Did you want to add any more about Joseph, Lee, in terms of why they've been?
No, I mean, so in the UK, as Damien said, I mean, 99.5% of people don't take out any protection at all. They will go for the best option, the best leverage against the money that they're spending, which is generally the life only or the life with COLA. I will leave you with a little bit of a predicament here as well when we talk about period certain and powers of attorney acting in the best interest of their mother or their father, or whoever the annuitant is. When you think about a period certain, what is that? You are spending more of mum or dad's money to purchase a death benefit that your mum or dad are never going to see, but effectively will come back to the beneficiaries. So that's one of the reasons that we see a lot less people in the UK talk about it. Going back to Josie's case, all she was concerned about was that cost of living increasing. That was the important bit. The rest of it she didn't worry about. In her head, she had written off that money because that had provided the peace of mind that she didn't have to sit and write that check out every single month, not knowing how long that was going to continue for. And you will see this when you talk to people in this situation, that becomes a real issue. You're sitting there looking at this bank account just depleting every single month, thinking, what is going to happen, if we get to a point where that money runs out? Okay.
All right. Next question. Any tips on how to get an admissions director to refer an agent to their clients? Now, I imagine you could probably spend quite some time talking about this topic alone, but any short little tips you'd have for the group?
I think, yeah, that's, when I said it was just at the end there, the next steps, if that's something that you guys are interested in, we can work with you probably in a smaller scale than we're talking to you at the moment, and we can work with you individually to to be able to work for communities, and to get them to the point where they will refer you clients. So if that's something that you're interested in, absolutely speak to Brittany and she will put you back in touch with us and we can set up some meetings to do that. We probably wouldn't do it justice in the time that we've got left here, if I'm honest. But Lee, was there any sentence you'd want to give the guys that are listening?
No, because we can help you. We've dealt, just to give you context on that, Damien and I, between us, have been into probably, I don't know, anywhere between 300 and 400 care communities, East Coast to West Coast in the US. We have never been thrown out of one. We have never been told by any executive director, marketing director, or sales director that this is not a good idea. The issue that we have always had is the lack of agents or advisors that we wanted to put into these communities. We have a route to that business. We have a successful route to that business, one that is proven in the UK and is now proven in the US. So as Damien says, and we'll work this with Brittany as well, for future webinars, future sort of workshops that we do, that we can go down that. It's something that will take us a good, probably, an hour or two to go through to help you down that route. But yes, the short answer is we can help you.
Yeah, and just Brittany, just before we finish on that subject, the key to this is building rapport, building relationships, and then for that to move to trust. Because only once you've got trust with the people in the community are they going to let you talk to their residents. So that's the kind of stuff that we major on when we talk about it next time.
Exactly that. So for folks on the call, if you're interested in moving forward and really specializing essentially in the My Immediate Care plan, reach out to our team. Like they've mentioned, we'll get the team back in touch all together to get that additional training and next steps taken care of. So with that, for those on the call, about an hour after the session wraps up, you'll be receiving an email from GoToWebinar. That email will have a link to a replay of this session, so be keeping an eye out for that. But overall, thank you everyone for joining us today, especially on a Friday. Again, our team is standing by if there's any additional questions or you'd like to get in touch with Neil, Damien, and Lee. Of course, we can be reached at 800-228-0008. So I think that wraps it up for us, and everybody enjoy the rest of your day.
Thank you. Thanks so much.
Thank you.